Let's take a look at commodities for the rest of the week. We are joined by Scott Bauer, CEO of Prosper Trading Academy. Scott, it's great to see you. Can we start off with gold? It's barely above $1,700 here. You see a possible risk of a breakdown?
Yeah, I really do, Andy. Until this morning, gold had held on to its recent gains, but obviously getting hit this morning down significantly on that hot CPI report, with the dollar surging back. Gold has plummeted from the highs that we hit earlier this year because investors are really looking for better returns from the dollar and quite frankly, sovereign debt amongst surging interest rates. So this report this morning, which really put a halt on the weaker dollar that we've seen over the last week or so, not good for gold. And if this breaks down below 1,700, which, we look at these big round numbers typically as, maybe some technical resistance or support. It is big support here, 1,700 in gold. If we break down there, I really think 1,650 could be the next stop.
Ouch, 1,650. What about oil? Obviously, supply is still tight, and we're hearing from Bloomberg that in the Permian, they're holding back on new rigs.
It is tight. There's no question that the structural outlook for oil remains tight, but that's also being offset by a lot of headwinds, cyclical headwinds, demand. You've got more lockdowns in China. So this has been a tremendous trend trade. In fact, one of the best trend trades that I can remember in recent memory, with buying dips and selling rips, because we have seen, pretty quick fluctuations here. But again, as we see renewed COVID-19 curves in China, that's really weighing on crude prices here. So even with supply constraints here, we're getting this big tug of war. I don't see a lot of downside here. I really don't. I know oil is down, just over 1% today. We're trading just over 86 and a quarter a barrel here. But I do think those supply constraints, all of a sudden, we could see a spike back up to the mid-90s.
Up to the mid-90s, but you're not looking for $110 anytime soon, for example?
No, I'm not. I mean, now going into the end of the year, maybe first quarter next year, we're going to have to reevaluate that. But in the near term here, no. I think this range, like 85 probably to 95, is going to be the range.
Talk to us about copper, because the war. I see a headline on Bloomberg that Evergrande, the debt-heavy real estate company, is resuming some projects. That apparently is helping the sentiment on base metals.
No doubt, and that is what will help that entire space here. But, we saw copper starting to slide a couple weeks ago. It did have a bounce kind of late summers, and we saw prices coming back a little bit. But the market remains really, really volatile, and there's so many macroeconomic pressures here. Again, China leading the way there. There's also consumer price pressures. So that is going to weigh, in my opinion, on demand for copper prices here. You look at the U.S., you look at the Eurozone here, and we're really in contraction territory. We really are. So these lockdowns and slowdowns in China, they obviously don't help. Copper's about 355 right now. I think there's a lot of headwinds here, Andy, and I think we could probably hit 330, 3.25.
What about aluminum, for example? A similar story?
Very similar story. I mean, you can almost overlap the two. I think until we see one of two things happening here, either just a relief, a breakthrough with Russia, Ukraine, which I think overall just that'll give a relief to commodities across the space, whether it's in the ags, whether it's in the metals, or lockdowns start to ease in China. I think these metals are really going to be under pressure.
What about the crops, Scott? Corn, we were talking about it earlier with Ben Isaacson of Scotia. It is down from its multi-year highs, but has shown a bit of strength lately.
It is, and they're relatively unchanged. They're almost unfazed with what's going on in the rest of the marketplace here. So I think those are, wheat, corn, soybeans, those are hanging in pretty strong here. And I think that is, I was looking to one spot in the commodity space here for maybe some resilience in the short term here, it would be in that space.
What about wheat? A similar story?
Same. Yeah, across the board. Wheat, soy, corn, Yeah, that's probably where I would want to be over the next 6 to 8 weeks.
Just give us your view on natural gas. Maybe we could throw up a 5-year chart. It, of course, trading still above $8 US. It's going to be expensive for people to heat their homes at this rate this winter.
It is going to be very, very expensive. I mean, this is probably the most volatile trade out there and the most volatile commodity, in my opinion, out there, because so much is dependent what's happening out in the Eurozone. How much are we possibly going to export out to them? So it is a touch and go scenario, both here, overseas here. I don't think there's going to be a big explosive move from here to the upside, but I also can't see the price of natural gas coming off too much over the next 6 to 8 weeks.
Scott, it's always great talking to you. Thank you very much indeed.
Thank you, sir.
Scott Bauer.